If you follow the Indian markets, you have seen the headlines. FIs are selling, flows look negative, and retail investors are nervous. But here is the uncomfortable truth. FIs are not selling India because India is weak. In this video, I will explain what FIs are really doing in the Indian markets and why most investors are misreading the signal completely. Retail investors treat FI data like a scoreboard. Buying means bullish, selling means bearish. That logic feels very simple, but it is wrong. FIs don't think in headlines, they think in risk and allocation. And when global conditions change, they don't exit the countries, they reposition their capital. Now that difference matters. FIs manage massive global portfolios. They cannot sell emotionally, move in one direction only, and react to the daily noise. Instead, they rotate. So when the uncertainty rises, they reduce their exposure to higher risk segments, move towards liquidity, protect their portfolio stability. Now, this shows up as selling, but it is actually risk control, not loss of conviction. Here is what often gets missed. From a global perspective, India remains one of the fastest growing large economies, supported by domestic demand and very attractive on a long term basis, on a structural point. So, FIs are not giving up on India, they are trimming their excess exposure, avoiding crowded trades, waiting for better global clarity. Now, that is very different from exiting. So, FI's behavior in India is often decided outside India. Now, it depends on the global interest rates, currency movement, and risk appetite set by US markets and China. So, when the global uncertainty rises, FIs reduce their exposure everywhere, even in the strong markets. So, FI selling does not automatically mean something is wrong with India. It often means the world is cautious. The biggest mistakes retail investors make is reacting emotionally to the FI numbers. They panic when they see selling, they chase when they see buying. But FIs don't trade to send the signals, they trade to manage their portfolios. Blindly following these FI flows turns investing into a stress instead of a strategy. So instead of asking, are FIs buying or selling today? You should ask, which segments are they reducing? Where is the liquidity moving? Is the risk reduction or a conviction loss? So that shift in thinking will change everything. Now, if you want to understand what big money is actually doing, not what the headlines are suggesting, subscribe to this channel because FIs don't announce their strategy, they reveal it quietly over time. Thank you.